Did you know that there's a system running the world, controlling everything from prices to energy to government policy? And no, it's not the banking system. It's not the stock market. It's the petrodollar. For over 50 years, it's been shaping our world. So, what is the petrodollar? To understand the petrodollar, we first need to understand why oil is so important. We use oil to fuel our cars, planes, and ships to transport people and goods around our countries and around the globe. We use it to make plastics. In some countries, we use it to produce electricity. We even use it to manufacture chemicals, fertilizers, and many other everyday products. Our modern economy depends on oil for basically everything. Because oil is so important, countries are constantly buying and selling it. Some countries produce a lot of oil, like Saudi Arabia. Others use a lot but don't produce much, like Japan. This creates a massive global oil market. So how did the US dollar come to control this global market? To understand this, we need to go back to World War II. At the end of the war, while most of the world lay in ruins, the US emerged with its economy and manufacturing base intact. This led to countries agreeing to make the US dollar the center of the global financial system at the Bretton Woods Conference of 1944. This would be a new world order backed by the US dollar. The US promised that its dollars could be exchanged for gold, and so other currencies tied their currencies to the dollar. But in 1971, President Nixon decoupled the US economy from the gold standard. This was known as the Nixon shock. This transitioned the world into a fiat currency economy rather than a gold-backed economy. Fiat currency is government-issued money that isn't backed by a physical commodity like gold or silver, and instead gets its value from public trust and economic stability. After the US stopped backing dollars with gold, the dollar stayed dominant because the US economy was so huge and the US government was considered to be stable. Also, many global transactions were already done in dollars. So the dollar became what's called the world's reserve currency, meaning countries hold large amounts of it in their central banks. But in 1973, the world experienced the OPEC oil crisis. This was when Arab oil-producing countries stopped selling oil to countries supporting Israel in the Yom Kippur War, including the United States, in order to gain political leverage. This caused oil prices to quadruple, leading to massive shortages and severe inflation in Western economies. In response to this, the US made a major agreement with Saudi Arabia, one of the world's largest oil producers. The deal was simple. Saudi Arabia would sell its oil only in US dollars. In return, the US would provide military protection and support. Since Saudi Arabia was the largest of the oil-producing countries, the other ones soon had to follow suit. This meant that you needed US dollars if you wanted to buy oil from most major producers, no matter where you were in the world. This system is what we call the petrodollar system. Now here's the big idea. If every country needs oil, and oil is sold in dollars, then every country needs dollars. Imagine you're a country like Japan. You don't produce much oil, but you need oil to power your economy. To buy oil, you must first get US dollars. Second, keep dollar reserves ready. Third, trade with the US or hold US assets. This creates constant global demand for the US dollar, and that demand gives the US major advantages. It keeps the dollar strong because everyone needs dollars. It allows the US government to borrow money more easily and at lower interest rates. And it means the US can use financial systems like sanctions to influence other countries because so many international transactions go through US banks. In simple terms, the petrodollar helps keep the US dollar at the center of the world economy. What happens to the oil money that the oil-producing countries receive? They don't just store piles of cash, they invest it. This is called petrodollar recycling. For example, oil countries invest in US government bonds. They buy American companies. They invest in real estate and global markets. This means the dollars often flow back into the US financial system. It becomes a loop. First, countries buy oil with dollars. Second, oil producers earn dollars. Third, oil producers invest those dollars back into US assets. And fourthly, the dollar stays strong. So, what's the future of the petrodollar system? In recent years, some countries like Russia, Venezuela, India, and Pakistan have tried to trade oil in other currencies like the euro or the Chinese yuan. This is one of the goals of the BRICS trade alliance, which is a partnership of countries that aims to reduce global dependence on the dollar. So, here's the million-dollar question. Why are countries that are hostile to the US still trading oil in dollars? Moving away from the petrodollar system isn't as simple as it sounds. If you suddenly switch currencies, you're not just changing payments, you're disrupting contracts, hedging systems, insurance, and pricing models. The US dollar offers high liquidity, meaning that you can move billions without crashing the market, and it has strong legal protections. It's like when Facebook tried to introduce threads to compete with Twitter. It's not so easy to suddenly get everyone to move platforms when everything's already happening on Twitter, but China and Russia are reducing their dollar use selectively. Recently, Russia has increased oil trade with China in Yuan. It's settled some of its transactions in rubles, and it's reduced its US Treasury holdings. China now promotes Yuan-denominated oil contracts, and it encourages trade settlements in Yuan with its trading partners. But here's the key. They reduce dollar use where it's politically necessary, especially under sanctions, while still using it. When it's convenient and efficient, it's a gradual shift, not a revolution. Now, let's dig deeper into why this shift is happening and what it really means for the global economy. The petrodollar system has essentially created what economists call an exorbitant privilege for the United States. Think about it this way. When France needs oil, they have to first earn dollars by exporting goods or services to dollar-paying countries. Then they use those hard-earned dollars to buy oil. But when America needs oil, they just print more dollars. There's no intermediate step. They don't have to produce something of value first. They can literally create the currency out of thin air and trade it for actual physical resources. This might sound crazy, but it's exactly how the system works. The US Federal Reserve can expand the money supply, and as long as global oil demand keeps dollars in high demand, the currency holds its value. This arrangement has allowed the United States to run continuous trade deficits for decades. Normally, if a country imports way more than it exports, its currency would collapse because there'd be too many of those currency units floating around internationally. But the petrodollar breaks that rule. America can keep buying more from the world than it sells because other countries need those dollars to buy oil. They're not trying to get rid of dollars, they're trying to accumulate them. It's an incredible setup that no other country enjoys. China has to manufacture and export massive amounts of goods to earn the dollars it needs. Japan has to do the same. European countries have to maintain trade surpluses, or at least balance trade, but America gets a free pass. The numbers here are staggering. The US has run a trade deficit almost every single year since 1975. We're talking about cumulative deficits in the tens of trillions of dollars over that period. In 2023 alone, the US trade deficit was over $900 billion. That means America bought $900 billion more in goods and services from the rest of the world than it sold to them. In a normal economic system, this would be completely unsustainable. The dollar would crash, inflation would spiral, the country would face a currency crisis. But because of the petrodollar and the broader dollar reserve system, it just keeps working year after year. But here's where the cracks are starting to show. Countries are waking up to the fact that this system massively benefits the US at their expense. Let's take China as the prime example. China has been the world's manufacturing powerhouse for the last 3 decades. They make everything from iPhones to furniture to solar panels. They export these goods all over the world and get paid in dollars. At its peak, China was holding over $3 trillion in foreign exchange reserves, mostly in US Treasury bonds. Think about what this means. Chinese workers were making real physical products in factories. Americans were buying those products with dollars. And then China was lending those same dollars back to the American government by buying treasury bonds. Essentially, China was funding American consumption of Chinese goods. It's a bizarre circular flow that only makes sense in the context of the petrodollar system. The Chinese leadership looked at this arrangement and realized they were getting a bad deal. Sure, they were getting rich and industrializing rapidly, but they were also making themselves completely dependent on the US financial system. If America ever decided to freeze Chinese dollar assets, Like they did to Russia after the Ukraine invasion, China would lose trillions overnight. Their entire economic model would collapse. This vulnerability became impossible to ignore after the US weaponized the dollar against Russia in 2022. The West froze around $300 billion of Russian central bank reserves. This was a nuclear option in financial warfare, and it sent shockwaves through Beijing. If they could do this to Russia, a nuclear armed major power, they could absolutely do it to China if relations deteriorated enough. So China started preparing alternatives, and they've been remarkably systematic about it. First, they launched the Shanghai International Energy Exchange in 2018. This allows oil to be traded in yuan rather than dollars. To make this attractive to oil sellers who might be nervous about holding yuan, China added a clever feature. The contracts are convertible to gold, so Saudi Arabia or Russia or Venezuela can sell oil for yuan, then immediately convert those yuan to gold if they want. This gives them an exit strategy and makes the yuan option less risky. It's called the Petro-Yuan system, and while it's still small compared to Petrodollar trade, it's growing steadily. Estimates suggest that around 5 to 8% of global oil trade now happens in yuan. That doesn't sound like much, but 5 years ago, it was essentially zero. The trajectory is what matters. Second, China has been stockpiling gold at an incredible rate. The People's Bank of China has been buying gold almost every single month for years. Official reserves are now over 2,000 tons, but many analysts believe the real number is much higher because China has a history of understating its gold holdings. Why does this matter? Because gold is the ultimate neutral reserve asset. It's not controlled by any government. It can't be frozen or sanctioned. If you hold physical gold in your own vaults, nobody can take it away from you. China is building a cushion of gold reserves so that if the dollar system ever locks them out, they have an alternative store of value. They're essentially preparing for a post-dollar world. Third, China has been signing bilateral currency swap agreements with dozens of countries. These agreements allow two countries to trade directly in their own currencies without using dollars as an intermediary. For example, China and Russia can now trade with each other using yuan and rubles. Brazil and China can trade using yuan and reals. These swap lines create alternative payment channels that bypass the US financial system entirely. It's like building a separate internet that doesn't route through American servers. Each individual swap agreement is small, but collectively they're creating a parallel financial infrastructure. There are now over 30 countries that have currency swap deals with China totaling hundreds of billions of dollars in potential non-dollar trade. Fourth, and this is more recent, China has been pushing the digital yuan, also called the ECNY. This is a central bank digital currency that allows instant electronic payments without needing the traditional banking system. The advantage here is speed and control. Digital yuan transactions don't need to go through SWIFT, the international banking messaging system that the US can monitor and control. They happen on Chinese-controlled networks. If the digital yuan gets adopted internationally, it could significantly reduce dollar dominance in payment systems. China has been testing this in pilot programs and rolling it out domestically. The next phase is international adoption, and they're pushing hard in Belt and Road countries and among BRICS members. Russia's moves have been even more dramatic because they've been forced into it by sanctions after 2014 when the US sanctioned Russia over Crimea. Russian policymakers realized that they needed to reduce dollar exposure fast. They started dumping US Treasury bonds, cutting their holdings from over $100 billion down to almost nothing. They increased gold reserves massively. Russia's central bank gold holdings went from around 1,000 tons to over 2,300 tons in just a few years. They also started settling more trade in rubles and euros. When Russia sells natural gas to Europe, they increasingly demand payment in rubles rather than dollars or euros. This forces European buyers to acquire rubles, creating demand for the Russian currency. After the 2022 Ukraine invasion and the massive sanctions that followed, Russia accelerated these trends. They've been selling oil and gas to China and India in yuan and rubles. They've essentially been cut off from dollar markets, so they had no choice but to build alternatives. Interestingly, this has made Russia a testing ground for de-dollarization. If Russia can survive and even thrive while largely excluded from the dollar system, it proves to other countries that alternatives are viable. China is watching very closely because Russia's experience is basically a preview of what might happen to China if US-China relations collapse completely. India presents a fascinating middle case. They're not trying to destroy the dollar system like China and Russia arguably are, but they're pragmatic and they'll use whatever system works best for their interests. When Russian oil became cheap because of Western sanctions, India started buying massive amounts of it. But they didn't want to pay in dollars because that would expose Indian banks to US sanctions risk. So they worked out schemes to pay in rupees and dirhams. It's complicated and inefficient, but it works. India has also been buying more gold and diversifying its reserves away from pure dollar holdings. They're not making aggressive moves against the petrodollar, but they're quietly preparing for a world where the dollar isn't the only option. Even traditional US allies are starting to hedge their bets. Saudi Arabia, the original architect of the petrodollar alongside the US, has been making noise about accepting yuan for oil sales to China. In 2023, there were serious discussions between Saudi Arabia and China about yuan-denominated oil contracts. Nothing has been finalized, but the fact that the Saudis are even considering it is significant. For decades, it was unthinkable that Saudi Arabia would betray the petrodollar deal, but times are changing. China is now Saudi Arabia's largest customer for oil, buying way more than the US does. The Saudis are looking at the situation pragmatically. Why antagonize your best customer by refusing to accept their currency? The US still provides security guarantees, but the relationship isn't what it used to be, especially after tensions over the Jamal Khashoggi killing and disagreements about oil production levels. The United Arab Emirates has also been testing yuan settlement for oil trades. With China, Kuwait has discussed it. Even some African oil producers are considering it. None of these countries are abandoning the dollar completely, but they're creating optionality. They're setting up the infrastructure so that if they ever need to move away from the dollar quickly, they can. It's like having a backup generator. You hope you never need it, but you install it anyway, just in case. This erosion of exclusivity is a big problem for the petrodollar, even if total dollar oil trade is still dominant in volume terms. Now, let's talk about what this means for the average person in America, because this isn't just abstract geopolitics. It has real consequences for your daily life. The petrodollar system has been subsidizing American living standards for 50 years. When other countries have to hold dollars to buy oil, it creates massive demand for the currency. This keeps the dollar strong, which makes imports cheap. Go to Walmart or Target and look at where everything is made. China, Vietnam, Bangladesh, Mexico, almost nothing is made in America anymore, but Americans can afford all this imported stuff because the dollar is strong. A strong dollar means your paycheck goes further when buying foreign-made goods. If the petrodollar weakens or collapses, that subsidy disappears. Suddenly those imports get expensive. Your iPhone costs more, your clothes cost more, your electronics cost more, even your food costs more, because much of it is imported or made with imported components and equipment. For a country that's gotten used to cheap stuff, this would be a shock. Americans might have to start actually considering prices and making trade-offs rather than just buying whatever they want. The psychological adjustment would be as hard as the economic one. We've had decades of rising material living standards based partly on cheap imports enabled by the strong petrodollar. The second impact would be on government spending. This is potentially even bigger. The US federal government currently spends way more than it collects in taxes. The deficit for 2023 was over $1.5 trillion. To cover this deficit, the government borrows money by selling treasury bonds. Now, here's the key point. Because of the petrodollar system, there's always huge global demand for these treasury bonds. Oil exporting countries need somewhere safe to park their dollars, so they buy US government debt. This allows the US government to borrow at very low interest rates. Currently, the government pays around 3 to 4% interest on its debt. That's incredibly cheap for a country with debt over $30 trillion. If the petrodollar system breaks down, demand for treasury bonds drops, interest rates would have to rise to attract buyers. Imagine if instead of 3%, the government had to pay 6 or 7% interest on new debt. The interest payments alone would consume a massive chunk of the federal budget. There would be enormous pressure to cut spending. What gets cut? Social Security benefits, Medicare, defense spending, infrastructure, education. Every category would be on the table. Alternatively, the government could raise taxes significantly to reduce the deficit. Either way, Americans would face much higher taxes or much worse public services, or both. This is the hard fiscal reality that the petrodollar has allowed politicians to avoid for decades. The third impact is geopolitical. The US has been able to play world police partly because the petrodollar gives it financial leverage. When the US sanctions a country like Iran or North Korea or Venezuela, those sanctions have teeth because they cut countries off from the dollar system. But if alternative currency systems exist, those sanctions become much weaker. Countries can just trade with China in yuan or with Russia in rubles and bypass US sanctions entirely. This is already happening to some extent. Iran sells oil to China in yuan. Venezuela does the same. North Korea trades with China in yuan. US sanctions still hurt, but they're not the economic death sentence they used to be. If this trend continues, American geopolitical influence decreases significantly. This would force a major rethinking of US foreign policy. For the past 30 years, American strategy has relied heavily on economic coercion through sanctions and financial pressure. If that tool becomes ineffective, the US would have to either use military force more often, which is expensive and unpopular, or simply accept that it can't control other countries' behavior as much as it used to. This would be a massive psychological adjustment for a country that's been the undisputed superpower since 1991. Some analysts argue this might actually be healthy, forcing the US to be more selective about its international commitments and to rely more on diplomacy than coercion. Others worry it would lead to a more chaotic world, with regional powers filling the vacuum left by declining American influence. There's also the domestic political impact to consider. If the economy struggles because of a weakening petrodollar, if inflation spikes because of a weaker dollar, if government services get cut because borrowing becomes expensive, the political system would face enormous stress. We've already seen how economic anxiety fuels populism and political polarization. A petrodollar crisis would supercharge these trends. There would be massive anger and people would demand someone to blame. Politicians would point fingers at China, at previous administrations, at the Federal Reserve. So the petrodollar era is ending, and what comes next will look very different from the last 50 years. Whether this transition happens smoothly or turns into a crisis will define the next generation of American economic policy and your personal financial future. If this breakdown gave you a completely new perspective on how global power really works, hit that like button, drop a comment, and tell me, do you think the US can maintain dollar dominance? Or are we watching the slow motion collapse of American financial power in real time? And subscribe because we're breaking down the hidden systems controlling money, geopolitics, and your wallet. The systems most people never see until it's too late. Thanks for watching. See you in the next one.